Before filing your income tax return, that is ITR, for any year, it is important to know the changes in the e-filing site, ITR forms for AY 2022-23 and the process of filing returns. Wouldn't it be great if you got some tips for filing your ITR? Watch this video till the end to learn some ITR filing tips which can be of great assistance to you to file your returns without making any mistakes and in a hassle-free manner. Hi everyone, I'm Maishri from Clio. We have assisted more than 80,000 tax experts and 6 million tax filers. Do subscribe to our channel to support us and get a clear explanation of finance concepts. The due date to file ITR for the financial year 2021-22 is 31st July 2022 for salaried and small businesses. Businesses requiring audit need to carry out their tax return filing by 31st October 2022. So here are a few tips for you to file your ITR. It is necessary to determine the residential status accurately as a lot depends on the residential status, like choosing the relevant ITR form, taxability of overseas income and reporting requirements. It is also important because a resident who is ordinary resident has to pay tax on his or her worldwide income, though he or she can claim the benefit of DTAA, whereas non-resident or resident but not ordinary resident, that is RNOR, has to pay tax only on that income which has been sourced from India or received or earned in India. The next most important thing is to choose the correct ITR form. The CBDT has notified the new ITR forms for the assessment year 2022-23. It has notified forms Sahaj ITR 1, ITR 2, ITR 3, Sugam ITR 4, ITR 5, ITR 6 and ITR 7. The income tax return forms have been kept unchanged. If you're filing a return to Clear Tax platform, it will automatically select your ITR form after you fill in all the details. However, some important changes made in the ITR forms for the financial year 2021-22 should be noted. An individual will not be eligible to file ITR 1 or ITR 4 if he or she is a director of a company or has invested in unlisted equity shares, or income tax on ESOPs is deferred, or where TDS has been deducted under Section 194N of the Income Tax Act 1961. TDS under Section 194N is deducted on cash withdrawal from a bank account exceeding a specified limit. Further, individuals receiving pensions from accounts held in foreign countries and filing ITR 1 in India will be required to provide additional details. They will have to give details of the retirement benefits account maintained in a notified country under Section 89A and the retirement account maintained with non-notified countries. The ITR 2 form has been modified to capture additional information with respect to ESOPs provided by eligible startups. The event for taxation is deferred to the point of sale. A separate schedule has now been introduced to capture details of such deferment. Moreover, interest accrued on PF contributions beyond Rs 2.5 lakh is taxable. The tax return forms now seek to capture details of such interest accrued as well. The new tax regime is different in two ways from the old one. Firstly, it has more slabs with lower tax rates, and secondly, all the major exemptions and deductions available to taxpayers in the existing old tax regime are not allowed if the new tax regime is chosen. We have observed that most taxpayers benefit from being in the old tax regime when they maximize Section 80C and go for tax deductions and benefits available in the salary structure, such as claiming HRA, receiving a part of CTCS reimbursements, etc. The taxpayers who do not prefer to invest in tax-saving instruments and are not eligible for any exemptions from income may choose the reduced slab rates of the new tax regime. If you file your income tax return on Clear Tax platform, it will help you to know which tax regime is suitable for you based on your information provided. If you happen to be a doctor, architect, engineer, etc., and your source of income is through professional consultation, then you can opt for a presumptive taxation scheme under Section 44 ADA. You can refer to our video to know more about the presumptive taxation scheme. In such cases, you can file the ITR 4 instead of a lengthy ITR 3 form. However, if your income is more than Rs 50 lakhs, then you need to proceed with the ITR 3 form. Businesses can also file the simple ITR 4 if they opt for a presumptive taxation scheme under Section 44 AD. You can know more about it from the link given in the description box below. Don't you think I have made your ITR filing easier? If yes, Please comment yes in the comment section below. The Annual Information Statement, that is AIS, is an extensive view of information for a taxpayer displayed in Form 26AS. You can see all your financial information such as savings, interest income, dividend income, etc. It also shows a summary of all such information that helps in filing income tax returns. It also accepts feedback from the taxpayers on the information displayed in AIS. The government has increased focus on voluntary compliance by the taxpayers by introducing the Annual Information Statement. One needs to ensure that there is no omission or misreporting of these details. The information in AIS is broadly categorized into tax deducted or collected at source, advance tax or self-assessment tax, specified financial transactions, demand or refund, and pending or completed proceedings. The government released a notification on 21st April 2022 that specifies additional conditions for filing income tax returns even if your income is below the basic exemption limit. The conditions are: if your total business sales or turnover or gross receipts during the financial year exceed Rs 60 lakh, or total professional gross receipts exceed Rs 10 lakh during the financial year, or aggregate TDS and TCS during the financial year is Rs 25,000 or more. In the case of senior citizens, an increased limit of Rs 50,000 shall be applicable, or total deposits in one or more savings bank accounts are Rs 50 lakh or more during the financial year. These are the new conditions, but the Act already contains certain conditions where you must file an income tax return even if the income is below the threshold limit. These conditions are: if you have deposited over Rs 1 crore in one or more current accounts maintained with a bank or a cooperative bank, or if you have incurred an aggregate expenditure of over Rs 2 lakh to a foreign country, or if you have incurred aggregate expenditure over Rs 1 lakh towards payment of electricity bill. If you have an income tax refund due, then you need to make sure that the bank account you wish to receive the refund amount in is pre-validated on the income tax e-filing portal. If anyone has not done this, then the tax refund will not be credited into your bank account. The Income Tax Department issues only e-refunds which are directly credited into the bank account. Along with the pre-validation of the bank account, you will also have to ensure that your PAN is linked with the bank account in which the income tax refund amount has to be credited. I hope this video was helpful for you. For queries related to business or finance, you can contact our experts by clicking on the chat link provided in the description box below. Also, don't forget to subscribe to our channel for more such informative videos and stay tuned for more updates.